Hello everyone, this is Steve Dalia. I've got the exact top of the hour, so we're going to start here in a second. I'm just going to give maybe 2 minutes for the room to fill up. We did have quite a nice bit of registrants, and they're still working their way into the room. So while we're doing that, I'll just give you a little background that this class, Incorporation 101, we've been delivering it for a little while here in the state of Florida, and it's been well received, as you can see from some of the comments from some of our happy customers over the last 2+ years. And we've been invited into just about every major association in the state, as well as a number of large offices. And I think the reason for that is, number one, the content of the course is very thorough and laid out well. But more importantly, I think the larger successful brokerages, as well as the large realtor associations, understand that this is a very important topic, and it's a benefit that you get from being licensed in Florida that, quite frankly, other realtors in other states just don't get. So this is a Florida-specific presentation today. And Florida is absolutely one of the best states to consider incorporating in. So we'll just give it another minute while the room fills up. We still have a lot of people working their way in to the room. So we'll get started here in about a minute. While I'm waiting, just a little bit of housekeeping. There is a chat window, so you can go ahead and type your questions in to the right, and I will answer them towards the end of the presentation or as I go through certain slides. I know certain questions that come up at different points, so I'll probably pre-answer a lot of questions that always come up, but then at the end, we'll take a few minutes to answer the questions. And if for whatever reason I don't get to your question, we'll make a point to make sure we log them all. They all come to me, and I'll make sure we answer them all. Class runs about an hour. The live class goes an hour and a half, but I've cut it down a little bit for this special web presentation, and we'll try to get you on your way within about an hour. Okay, let's get started. I've got about 3 minutes after the hour, so I don't want to hold you up. I am going to record today's class, so if you have to leave before the end, although I hope you stay because I got some goodies for you at the end, I'll make sure I send out a recording to everyone who registered. So I'm going to go ahead and click the record button, and we are going to get started. So thank you very much for your attention, your registration and attention today. Let's get started. Hello everyone, my name is Steve Dalia. It's my privilege to be walking you through today's presentation titled Incorporation 101, Why Real Estate Agents Should Consider Incorporating or Forming an LLC. That's my phone number on the screen. You'll see my email address later. Feel free to contact me anytime after today's presentation, and I'll be happy to answer any questions that you may have. So let's go ahead and jump in. First, I want to talk about what incorporating or forming an LLC means. As you can see here, it's designed to be a separate legal entity that has its own privileges and liabilities distinct of its owners. It has the legal capacity to enter into agreements or contracts. It can incur and pay debts. It can sue or be sued. But most importantly, that bottom bullet point there ties back to the top, and that word separate is bolded for a reason. The corporate entity is going to be held responsible for its actions separate from the owner. So that whole business of separation is sort of a big deal, and we're going to talk a little bit about that as we go through the presentation. If If you come to this presentation today and you're not already incorporated, chances are very good you're operating as a sole proprietor. What is a sole proprietor? Well, it's what you're doing today. You're an individual, have to be an individual because only you as the individual are licensed. You own a business alone and not as a separate legal entity. Because of that, you have no legal protection. Reason being, your personal and business assets are combined under one umbrella. So you've got some buyers in your car, you're out showing them some properties, you get into a fender bender, they decide to sue you. You're not incorporated. Well, they might be suing you because you were acting as a real estate professional, but guess what? There is no separate entity for them to go after, so your business and your personal assets are combined all under one umbrella. So you will be getting sued personally in that case, hence no legal protection. In real estate, we also see this concept called a general partnership, where multiple people within a brokerage might team up, split some marketing expenses, deals come in, they work them together, and then they split the commission when they come in. This is even a little bit more sticky because now you, as what was once a sole proprietor, where you had your business assets and your personal assets under one umbrella, now you've got your partner's personal assets under the same umbrella. So if something goes wrong, it can get a little bit more tricky. Quick story, a friend of mine got invited to be a small partner in a firm that he wrote a business plan for in Texas a number of years ago. And unfortunately, 3 years went by. He never saw any money. He forgot about it. And he got served. The partnership was getting sued in a Texas court of law. He owned 2% of the partnership. Well, unfortunately for those guys, they lost the court case, and there was a judgment of $15,000 levied against the partnership. And unfortunately for my friend who had the 2% stake in the partnership, he had to pay the entire $15,000 judgment. And the reason for it was the other two partners at the time the judgment went down had no assets, so the judge ordered him to pay the entire $15,000. So it's important to understand what your options are in terms of corporate structures and how to set them up correctly to make sure you get the most protection that you can. So what are your options? Well, your options are twofold here in the state of Florida for realtors and really across the country. You can be a corporation or you can be a limited liability company. Now, when a realtor in Florida incorporates, you become what's known as a professional corporation, and you get the designation of a PA, which actually stands for Professional Association. And the reason for it is you are considered one of the few groups of professionals, hence you get the title Professional Corporation with the designation PA. And DBPR actually considers it a designation. Let's talk about the types of corporations. The first corporation I want to talk about is a C corporation. C corporations are typically your larger corporate entities. By definition, they have probably, well, they don't have to, but they usually have over 100 shareholders, because if there's under 100 shareholders, we have another type of corporation that I'll talk about in a second. But a C corporation, remember before we talked about how you keep your personal and your business assets separate. So in this case, the owners of the C corporation, because they have separation between business assets and personal assets, they have what we call limited liability. So what does that mean? Well, think of the economic collapse back in 2008. Everybody was calling for the bank executives' heads on a platter, and they never got them. And the reason for it was that the banks, it was the corporate entities that were found to have done the wrongdoing. The executives, even though a lot of them are owners because they own a lot of shares, they were protected. They had limited liability. So that's the great news. And their liability is limited to the money that they have invested in their shares. So if they're running the company and they make bonehead moves and the shares plummet, surely they can lose money, but they couldn't be criminally prosecuted. So C corporation, really, really good for asset protection. However, the downside for a C corporation for small entrepreneurs like this group today is the C corporation pays taxes, and the owners of the C corporation get hit with what we call double taxation. So think now that you're a small corporation, maybe it's you and a spouse, and you're a C corporation. Well, the C corporation has to do a corporate tax return every March 15th, and when they do their tax return, the corporate entity pays taxes. Now the owners, you and your spouse, have to take income, you have to draw income out of the entity as well, and now you have to pay tax on that income again. So that's double taxation. Now the government knew that this was going to be a hindrance to small businesses starting up, and small business startups are the backbone of the economy because small businesses sometimes grow, hire employees, create jobs, and it's good for everybody. So back in 1958, somebody found a little loophole in the tax code, and it was in subchapter S of the tax code where they found a loophole, and the subchapter S corporation was born, or we just call it an S corp. Now an S corp is reserved for small businesses, and when we say small businesses, S corps have to have less than 100 shareholders, and that will be you because DBPR says you can have a corporation or an LLC, but as an individual licensee, you must be the sole and individual owner of that entity. So you can be an S corporation because you fit the criteria of being a small business. The small business S corporation has all of the benefits of a C corporation with regard to asset protection and the owners enjoying limited liability, but it has a major advantage over the C corporation when it comes to taxation. The corporation itself pays no taxes. So I have a small business. You see it up on the screen there, Dalia Sales and Marketing, Inc. It is an S corporation. So every March 15th when I do my S corporation income tax return for Dalia Sales and Marketing, I have either a profit or a loss. So last year we had a profit. I do my corporate income tax return. I send it off to the IRS, but my corporation, because it's an S corporation, does not pay taxes. I'll say that again. My S corporation does not pay taxes. I still have to declare that income, and I tell the IRS what I earned, but now that amount flows through to my personal income tax return, and I deal with it there. Two major advantages of doing it that way. Number one, my personal income tax rate is probably less than what my corporate tax rate would have been if I were a C corporation. And number two, and I'm going to get into this in detail on an upcoming slide, when you own a company, the government allows you to take your money in two distinct buckets. Number one, you work for the company, so you draw a salary, and on that salary you owe self-employment tax, and we'll talk about that. But as the owner of the company, you also get to enjoy profits. We call those distributions. Whatever you take as a distribution is exempt from self-employment tax. So there are substantial savings by being able to pull your money out of an S corporation in two distinct buckets. And I'll show you a couple of slides on that. So the bottom line is the S Corp now has become the government's incentive to start a small business. And DBPR permits Florida realtors to do this. Some states in the country, by the way, do not allow realtors to incorporate. Florida is one of the best states. The fees are reasonable, and it's a great state for realtors to take advantage. Okay, that's a corporation. Your other option is to be an LLC. Now, an LLC is really, it's a different animal. It's sort of a hybrid between that sole proprietor partnership we talked about a few minutes ago, and a corporation. But the bottom line here for Florida realtors that want to form a corporate entity, the bottom line is the benefits are very similar. You still have the same limited liability, and you still get to enjoy the flow-through tax treatment. So now people in the presentation are starting to think, okay, well, I can be a PA or an LLC, which is better? Well, let's look at them side by side. Here's what they look like side by side, and you will see that they are more similar than they are different. The only difference is, if you look on the bottom, that check mark in the PA column, a PA is a corporation, and corporations are required to have a yearly board meeting and keep minutes of that yearly board meeting. But guess what? DBPR says you have to be the one and only individual owner. So that's right, to be compliant, you must have a board meeting with yourself every year, and you must keep minutes of that meeting. So when I perform this class live, usually people chuckle when I get to that point, and it is sort of silly. But there's good news on two fronts on this with regard to this. Number one, you're probably having this meeting anyway when you sit down every year and you do your business planning. So all you need to do is fill out that business plan, sign it, date it, put it in your file, and now you truly are compliant because you just sat down and you had a meeting about your business. So that's number one. Number two is, unless you get sued or audited, nobody's ever going to ask you for this. So it really is a compliance issue, but nobody's tracking you down to look for the minutes of your annual meeting. Although I will warn you, if you do incorporate with us or with anybody down the road, you're going to start getting things in the mail, and they are just from unscrupulous third-party companies that try to trick you into believing you need to comply with things like this by sending them money. Don't fall for it. If you ever get things in the mail, whether you incorporate with me today or not, call me anytime. The vast majority of those items are scams. So the trend for this, because of this, that yearly board meeting and corporate minutes is really such a non-issue, the trend in Florida is, and it doesn't matter to us, we handle any type of entity in any state. The bottom line is most real estate agents in Florida choose the PA, and the basic reason for it is twofold. Number one, it's $55 less expensive to do a PA in the state of Florida than it is to do an LLC. But the real reason why I think the vast majority of Florida realtors choose a PA over the LLC is that second bullet point. It says it puts you on par with doctors and lawyers. And what we mean by that is there are only 4 other groups of professionals that can put the PA after their name. In addition to doctors and lawyers, they are accountants and architects. So realtors think, well, number one, I'd like to save a few dollars. And number two, a lot of them believe, and this, my personal opinion is I believe this too, but that's just a personal opinion. It doesn't matter. I believe, that the PA is a little bit more prestigious after your name than LLC, because only those 5 groups of professionals can put the PA after their name. Anybody can put an LLC after their name. So the choice is yours. It doesn't matter to us. They both deliver the same benefits. Speaking of benefits, we talked a little bit about asset protection. We teased a little bit about tax savings. We're going to go into that in detail. A couple of other benefits you'll get by incorporating is adding credibility to your business and actually reducing your risk of an IRS audit. And we'll talk about a Wall Street Journal article that went into detail on that. So let's get into the asset protection part of it. We know we live in a very litigious society where you can get sued for anything. Whether you're guilty or innocent doesn't stop somebody from suing you. I live in South Florida. I travel across about a 5-county region doing this presentation for realtor associations and brokerages, and I've stopped counting all the lawyer billboards that I've seen trying to get somebody to sue somebody else. So the goal here is to operate under a corporate entity to put you under what we call a corporate veil. A corporate veil is a virtual wall between the assets of your corporate entity and your personal assets. So if you do get sued, chances are they're probably going to sue your corporate entity as well as you personally, but you'll have that corporate veil where you can kind of fend off lawsuits from going after your personal assets if you're conducting your corporate affairs correctly to keep your corporate veil strong. And we coach you on things like that. So what are things you can do to keep your corporate veil strong? Well, number one, make sure you have in your file the notice of the annual meeting and the corporate minutes. Make sure you open a separate business checking account. Bottom line, make sure you run your business like a business. So in case you ever are looking at a judge, you are really running your business correctly so you can keep your personal assets safe. And with regard to lawsuits, people will sue for anything. I had a client about 2 years ago. She was showing some buyers of hers through a listing, and the wife stubbed her toe on the couch. The wife of the buyer sued her buyer's agent. She sued the listing agent. She sued the buyer's brokerage, the listing agent's brokerage, the homeowner for their homeowner's insurance, and she even sued the furniture company. So these are some of the things that really, it's just absolutely crazy. Happy to report that case got thrown out of court, but crazier things have happened. If something like that stuck and she lost a judgment, she would have had to personally come out of pocket to pay the judgment in that case, because at the time she didn't have an entity. She later has formed one. So the bottom line is realtors do get sued. Rice Insurance Services, an E&O provider out of Kentucky, did a report about 5 years ago on the top 10 reasons why realtors get sued. Not all the reasons why realtors get sued, just the top 10 reasons. And there were things like fraud, breach of duty, but number 5 on the list was bodily injury and property damage. So it does happen. Operating under a corporate veil keeps your personal assets separate from your business assets. Matter of fact, if you Google, why should I incorporate, you'll read almost all the information out there online is about protecting your personal assets. So that's our asset protection portion of the presentation. So we hope you go your whole career and never get sued. But we know one thing. Every year you're in business, you're going to have to do a tax return. And what's the number one goal when you do your taxes? I pause so you can think about that. And the answer to that question, a buddy of mine works for the IRS, and he says the correct answer to that question is to pay only what you're legally obligated to pay. And I will tell you, I see that H&R Block commercial with the gentleman in the bow tie that says, "America, get your billions back." Florida realtors are probably the biggest group who is overpaying their taxes every year, because only about 10% of the 150,000 Florida realtors are incorporated. And when you see the tax savings on this slide, you will be horrified at the money that everybody is throwing away every year. So let's go through this simplified tax example. I've got a realtor in the state of Florida. We'll say it's a she, doesn't really matter, but she's married. She's earning $60,000. Now this is a simplified tax example, so maybe she earned 85 or 90 and she already wrote off all of her expenses. She wrote off her car expense, her wardrobe, her dry cleaning, her board dues, her brokerage fees, her website hosting, and 101 deductions that you as a realtor can probably take advantage of. As a matter of fact, I've got a form, 101 real estate deductions that I got from a CPA up in South Carolina, to say thanks for coming for today's presentation. I'll forward that to you when we're done here. So she's earned $60,000. Let's look at, in the middle column, let's look at what her tax obligation is today, and then we'll go to the right column and look at what her tax obligation could be if she were incorporated. First thing she needs to do is pay her self-employment tax. That comes to a whopping 15.3%. 2.9 for Medicare, 12.4 for Social Security. Some of you might be newly licensed, coming out of a job, and you might say, that looks high. I think I pay about half of that. You're right. As an employee, you do pay half of that. As an employer, when you were working, your employer paid the other half. Now you are both the employee and the employer as an independent contractor, so you get to pay, I call it, both sides of that transaction, kind of like a real estate deal. So $9,180 comes right off the top, and that's before we have to pay our state and federal income tax. Now, we live in Florida, so we don't pay a state income tax. However, C corporations have to pay the state of Florida a tax, so we'll talk about that at the end. But as an individual, you don't have to pay state income tax, and the federal tax in her situation, married, filing jointly with her husband at $60,000, puts her in the 28% tax bracket, so her total tax bill is $20,015. So now let's look at the next column over on the right. Remember earlier when I was discussing an S corporation, I said one of the benefits is you get to take your money in two buckets. Some of it salary, where you do pay self-employment tax, but some of it comes over as profits. We call those distributions. And whatever you take as a distribution is exempt from that 15.3% self-employment tax. Let's look at an example of that. Let's say I just made a decision to take 60% of my income as a salary and 40% of my income as a distribution. Let's look at the impact of that on my self-employment tax. You see it goes down from $9,180 to $5,508. And the reason for that is on this $24,000, I don't pay this 15.3%. So it drives the number down from $9,180 down to $5,508. The rest of the equation stays the same, but the bottom line is now I reduced her tax bill from $20,015 all the way down to $16,343, or a savings of $36.72. So a decent amount of money. Let's put that in perspective. Let's go back to the middle column. If she earned $60,000 at the top of the column, and she paid $20,000 in taxes at the bottom of the column, that means she netted $40,000. What's $40,000 divided by 12? $3,333 a month. So look at that. Her savings, just by filing a piece of paper, a couple $100, she's saving over a month's worth of income just because she now has a corporate entity. Great, right? Let's talk about that percentage. Why did she take a 60% salary? Why did she take a 40% distribution? Now we know that whatever we pay ourselves as a distribution is exempt from that 15.3% self-employment tax. So why wouldn't we just take all our money as a distribution? And the answer to that is because the IRS would not like that. They would frown on that. Because the IRS has a rule, and they say you must pay yourself a reasonable salary. However, they don't tell you what reasonable is. So we always want to try to maximize our savings, right? But we don't want to raise any red flags to get audited. So we want to know, well, what's the range? What is the safe range that I can take in the form of a distribution without getting audited or having a fight with the IRS? So what do? Well, what I do is I do a lot of research, and I look for people who are well credentialed in the space. And I happen to follow a gentleman. His name is Sandy Botkin, B-O-T-K-I-N, Sandy Botkin. Sandy is a very, very well-credentialed individual. He's a CPA and he's an attorney. As a CPA, he worked for one of the big firms, Deloitte and Touche. As an attorney, he worked for the IRS. And what he did at the IRS was he trained all the other tax attorneys on the tax code. So Sandy, as a CPA and an attorney who worked for the IRS, pretty much knows his stuff. Sandy also opened a tax reduction institute back in 2003, where he does tax consulting, and he also wrote a book that I own, a book that I recommend to everyone, and that book is called Lower Your Taxes Big Time by Sandy Botkin. Lower Your Taxes Big Time, Sandy Botkin. I bought it at Barnes & Noble for like $22. In Sandy's book, he talks about how you can save between 40 and 60% of your self-employment tax by opening up an S corporation. He goes on to say that you'd have to be brain dead not to open a business like this with the benefits that are here at your disposal. Those are Sandy's words, not mine. So Sandy says 40 to 60% is the sweet spot. So let's look at this math again if we happen to just choose the 60% distribution. So I just flipped the numbers here. So now you'll see on that second line on the right column, I flip-flopped the numbers. What does that do? In the middle, it takes my self-employment tax down to $3,672. It takes my total tax due down to $14,507, and it drives my savings up to $5,508. Now look at that number compared to the 3333 on the left middle column. It's like 1.7 months worth of work just because you now have an S corporation, because now you understand to the penny how this works. So not only are you better protecting your personal assets, but you're actually putting $5,000 or more, depending upon your numbers and depending upon what you and your tax advisor decide to take as a distribution, but you can see the tax advantages are substantial. Okay, let's tie this part of the presentation together. Couple summary points I want to make. People hear salary, they hear distribution, they think, oh my goodness, I've got to wait and pay myself a check every week or every month. I need to hire a payroll processing company. No, you don't. You can if you want to, you don't have to. They hear distributions. They think dividends, the way public companies pay dividends to their shareholders. Oh my goodness, do I have to wait 90 days to take my money? No. As that top bullet point says, every dollar you earn as commission is fully available to you as soon as it comes in. This next point is important. You just allocate some dollars as salary and some as distribution on your tax forms. This is a decision you make with your tax advisor. So I told you Sandy says 40 to 60%. Don't go by us, go by what you and your tax advisor believe is reasonable. But the bottom line is distributions are exempt from the self-employment tax. And keep in mind the IRS says you must pay yourself a reasonable salary. Okay? So I think we did a good job hammering home the tax benefits of having a corporate entity. What else do you get if you fire up a corporate entity? Well, how about additional credibility for your business? Did you know that when people see letters after your name, they just think you're smarter and better educated? And I know NAR understands this because I've lost track of all of the designations that you can get from NAR, and I'm sure many people on this call have a number of designations. And they're a good thing to have because they tell your clients and your prospective sellers and buyers that you studied a certain aspect of your business. You're diligent. You've differentiated yourself from all the rest of the realtors. Well, same thing with a corporate entity. By having that PA on your card, remember, only about 10% of all realtors in the state have taken advantage of this unbelievably awesome benefit that is there for the taking. So chances are, if you're in a competitive environment, the other realtor you're competing with probably doesn't have it. Just because odds are 9 out of 10 they're not going to. So it says things to your clients that you understand things like asset protection. You understand how money works, how to protect your assets, how to protect your savings, how to pay lower taxes. So maybe they'll entrust you with the sale of their largest asset, their home, right? So a lot of additional benefits come by having a corporate entity. Bottom line is it helps you stand out, it helps differentiate you, and then once you get it, what most realtors do is they add it to all of their marketing materials. Last point I want to talk about before we get into the process and talk about the information the Secretary of State requires and some of the DBPR rules upon setting up your corporate entity. By having an S corporation, you are 10 times less likely to be audited than the way you're probably doing your taxes today. Most of you are sole proprietors, so you itemize your deductions on a Schedule C on your 1040 and you send them in. Guess what? The IRS knows those Schedule Cs are the most ripe with illegal deductions, so they go after those at the rate of 10 times more than they do the S corporations. Furthermore, some of the reasoning behind that in this article that the Wall Street Journal did back in 2011, they interviewed CPAs, tax advisors, and they realized a few things. When the IRS audits your sole proprietor business, your Schedule C on a 1040, a staff accountant does that. When they audit your business entity, a CPA at the IRS does that. CPAs at the IRS get paid more than staff accountants do, right? A corporate audit is more involved than a personal audit, so the IRS's cost goes up dramatically to audit your small S corporation. And even if you're doing $200,000 a year, which that's a great year, to the IRS business auditors, a $200,000 corporation is small potatoes. So they'd rather look at large corporations like maybe GE. GE makes a mistake in just their aircraft division. It could be worth hundreds of thousands or millions of dollars to the IRS rather than chasing down your $200,000 PA to maybe find an extra $5,000 in taxes and fines. So reducing your risk of an audit is another big advantage of having a corporate entity. So how do you do it? What's involved? What are some of the rules and the statutes that are involved that you need to play by the rules? Let's talk about this. What I want to do now is I just popped up on below the screen here a download now button. So what I'd like you to do is, I've got this form. I'm going to walk you through it. I'm going to give you a second to go get it. And then I want to walk you through the form so I can tell you the exact information the Secretary of State requires to open up a corporate entity. And as we go through this form, I'm going to talk about some of the rules that DBPR has on us. So I'll give you half a second to go get that form. You don't have to print it out. You can just put it in another window and follow on the screen, or you can print it out later. But that is the form you'll use if at the end of this presentation you decide to take advantage of everything we've talked about and go ahead and form your corporate entity today. I told you earlier that 90% of Florida realtors don't have a corporate entity. How come? It can be costly. We routinely see people charging between $500 and $800. I've even seen one attorney who charged $1,250. The other reason is there's a perceived complexity about it. Realtors sometimes believe in order to open a corporate entity, they need multiple years of income tax returns, multiple months of bank statements. No, we've boiled it down to just this simple, it's a one-page form front and back. The way you'll print it out now will be 2 pages, right? So let's go ahead and let's go through this form. And I'll probably answer, I see a number of questions that are here about some things. We're going to answer a lot of those right now going through this form. The first thing any corporate entity needs is a name. Well, in the state of Florida, DBPR has made it very simple for Florida realtors. Your name of your corporate entity is quite simply the name that's on your Florida real estate license, comma, PA or comma, LLC. That's it. It's simple. It can't be Steve Dalia Real Estate Services, Steve Dalia XYZ Homes, Dream Street Investments. It can't be any of those. All it can be, if you look up my name on the Florida license, my name is Stephen M. Dalia. I practice what I preached. I formed a PA. So my PA is Stephen M. Dalia, comma, PA. Simple, straightforward. That's it. No other options. Your name is of your company is the name that's on your Florida real estate license. Period. Now that I emphasize that so strongly, let me give you one exception. The one exception is if you don't like your middle name or you want to get your middle name off your license, like I did. I had my full middle name on my license. When I incorporated, I dropped my middle name and I went to my middle initial. DBPR will allow you to do that. And there's a form we send to them that I'll talk about at the end, and you just attach a little letter if you're going to make that change. So that's the only exception. We ask for an alternate because in the state of Florida, we do have a lot of people with common names. But the good news is I've been doing this for 2.5, not quite 2.5, 2.25 years, and I've only had 3 conflicts. And the good news is, even if somebody has your name, remember, 90% of the state is not incorporated. So chances are you're going to be the first one anyway. So that's your name. Number 2 on the form, and your form is slightly different than what's on the screen here. Number 2 on the form, what state do you want to form your entity in? And you'll see on the form you have now, I just hard-coded in Florida. DBPR will only recognize Florida entities. What type of company do you want? You just need to tell us, the Secretary of State, whether you want a PA or an LLC. Then you need to tell the Secretary of State what is the purpose of your company. For professional corporations, you must designate a purpose of the company. And now you look on the bottom of the form, I have the little cheat sheet there. Most simply enter real estate services as the purpose of the company. And also on the form, question comes up here. It says, husband and wife teams, can we both be on it? No, sole owner, right? So you have to make a decision. You either both need an entity or you need to choose one or the other that you're going to run all your business through. Okay, purpose of the company, real estate services, and it's right on the form. Section 5 and 6 on the form. 5 is for LLCs only. 6 is for PAs only. If you are choosing an LLC, the state wants to know who's going to run it and how long do you want to keep it in business. 100% of the people check the top box to A and B. If you're retiring back to Argentina in 3 years and you know you're never coming back, you can plan to dissolve it on a certain date. So you could fill out the bottom of box B. But most, 100% so far, have filled out the top boxes A and B. Just check the top boxes. Most people do a PA, so that would be Section 6 for corporations only. When you form a corporate entity in the state of Florida, they're going to want to issue you shares of stock. Kind of silly because you can never sell them. They're not worth anything, but it's part of the process, so you have to tell us on the form what you want. The state, by default, is going to issue 1,500 shares of stock at a par value of 0. The par value of a share of stock is the lowest amount of money that it can sell for. Again, on this one, just about 100% of people check yes and yes to A and B. One of my predecessors had a guy that wanted to give himself 1 million shares of stock at a $5 value, and all that did was make the IRS want to talk to him about taxes he owed on the formation of his new $5 million company. So we absolutely don't need to get creative here. We can just check, yes, give me 1,500. Yes, give them a par value of 0. Nice and simple, and we're on our way. Section 7 of the form says name and address of key executives. Well, remember, even though you see multiple on the screen and you see multiple on your form, it can only be one, and it must be you personally. Now, I'll give you a little lesson I learned on this one. So I have a good friend. His name is Charles, but he goes by Chuck. I helped him with his formation a couple of months ago. So his proper name is Charles up on Section 1 with his last name, comma, P.A. But on Section 7, he's Chuck. That's okay, because when he goes to open his bank account, he's got ID for Chuck. And everybody knows Chuck is a nickname for Charles. I had an issue where a couple of months ago I did a formation for a young lady, and she was from China, so she had a Chinese name, so her PA was her proper Chinese name, comma, PA. But when we put number 7 in here, the name she goes by in this country is Lucy. So we put Lucy with her Chinese last name there, her address, phone, email, and then when she went to open her bank account, her banker said, okay, I need ID for Lucy, because this person will be the president of your corporation. So it has to be you. So it can't be crazy nicknames. You just have to have ID for this. Otherwise, you won't be able to open your bank account. So in Lucy's case, we had to file an amendment with the state. It was my mistake. I should have known better. Excuse me. That's why I take a minute to go over it with you now. Okay? So name, address, printed clearly, phone number, and email address. Email is real important because that's how we communicate with you, and that's how the state is going to communicate with you with regard to sending you your articles of formation, as well as sending you reminders for some things that you need to be concerned about next year, which I'll talk about in a moment. Okay, so I've been doing this for a little over 2 years. I've done about 2,000 filings in the state of Florida. Here's what we do if you decide you want to take advantage of a little offer we're going to make you that you probably see on the back of the form. Here's what we do. We do the company name search. We handle the electronic filing to the Secretary of State. We complete and review the articles of formation as your incorporator. They come to us. We check them. We send them to you. Then we have 2 different packages, right? So if you choose our standard package, we're going to provide to you all of the links to the IRS forms to get your tax ID number, to get your become an S corporation, to be compliant with DBPR, to open a business checking account. All the goodies come in an email to you. Now, the next 3 bullet points here are part of our bundled package where you can have us do that. We'll get your federal tax ID. We'll complete and submit your IRS Form 2553 to get you treated as an S corporation, and we'll complete and submit to DBPR for your compliance form, which is called RE16. We also have an agreement with Regions Bank, where Regions Bank has a $150 reward if you decide to open your business checking account with them. And as being my customer, I provide an invitation to get that. You need to be invited and you need to register for it. And then if you choose to have anyone other than yourself be your registered agent, we provide that service for $100 per year. It's totally optional. Most people don't want it. What a registered agent is, it's a person or a business that has a physical presence in the state in which your business is licensed in. In case anybody decides to sue you, there has to be somewhere where the legal process can be served. Most realtors simply make themselves their registered agent. And if you're going to use the address as your broker's address, you probably want to make the registered agent your home address, because most brokers don't want their office being used as a registered agent address, because things that go on with a registered agent is service of process, which means usually the sheriff delivering legal lawsuit papers, and most brokers don't want that element at their offices. So again, you can be your own registered agent, and that's what almost everybody chooses. Okay, two options. You see them on the back. So the first is the standard option. It's pretty simple and straightforward. There's a $99 service fee and then whatever the state filing fee is. It's $70 for a PA, and then if you go to the bottom section there, it's $125 for an LLC. So real simple, $169. We handle the formation. We tell you exactly what to do next. You do all the other items. So that's it. Then the other thing you need to be concerned about is once you open your entity, the state of Florida is going to want you to pay a tax every year to keep your business open and operating every year. It's called an annual report. Has nothing to do with the annual meeting we talked about earlier. It's simply a tax for the privilege of keeping your business open and operating from year to year. It's due May 1st every year, and it starts the year after you form your corporate entity. So if you incorporate now, you don't pay this until May of 2017. It's $150 for a PA. It's $138.75 for an LLC. Make sure you pay it by May 1st. If you pay it on May 2nd, the state tacks on a $400 late fee, and they do not negotiate. And if you don't pay the $550 by the third Thursday in September, they will dissolve your entity and you lose any benefits you would have had. So again, you don't need to worry about this until next May, but I wanted you to be aware of it. Okay, if you choose our standard package, then here's what you need to do next. You don't do anything until you get your articles of formation. Then the first thing you want to do is file your tax ID number. I will tell you, so many of our clients get tripped up here. If you read it and you think about it, you can get through this. You have to navigate about 12 screens online or a really ugly SS4 form that is just rife with ambiguous statements. I've had so many people get this wrong. We've had to file amendments. That's why we now just offer it as part of our bundled package. So you want to get your tax ID number. You want to comply with DBPR. When you do form a PA or an LLC, DBPR wants you to submit form RE16, and there's a $30 fee for that. As part of our bundled package, we'll handle that. And the next box on the bottom left, Form 2553, is probably the most important box in this whole presentation. It is through that form that you get all of the tax benefits that we talked about today. You have 75 days to file this. This is a 4-page form. This one can be a little tricky too. Most people get all confused when they do this. We've done hundreds of them, so we know how to do it. Very simple. And it's part of our bundled package, as you can see on our form. You have 75 days to do it. If you submit it after 75 days, the IRS will probably still give it to you, but they may not give it to you this year. So you may be a C corporation your first full year in business, and that's going to cost you a lot of money. So you want to make sure you take care of this. You want to make sure it's done right. It does take them about 60 days to get back to you. They're going to send you a letter saying you will now be treated as an S corporation. Then you want to open a business account, and I will send you the invitation for the Regions Bank $150 reward. And the last thing you want to do is update your W-9 with your broker. Because once you do all this, you want to make sure your broker knows to pay your corporate entity and tag it to your tax ID number on your next transaction. Don't pay you personally and tag that income to your Social Security number. So if you choose the standard package, I send you an email with a link to all of this, and you do all of this on your own. Or you can have us do it. Here's how it works. We will do the federal ID, and you don't have to take all of these together. If you want to pick and choose and do them a la carte, You'll see on the back of the form, you would pay $99 to have us obtain your federal tax ID number. You can choose to have us complete and submit your IRS Form 2553 for the S-Corp election, and we can also submit RE16 compliance form. So if you bundled all this together, it would come to a total of $466 in services. As a way of saying thank you for coming to our presentation today, we're offering a courtesy discount of $167, and that brings that down to $299. So you'll see that is a special. It does end tomorrow. I'm not keeping that open forever. So all you have to do if you want to take advantage of that is just check the box where it says best value on your form. Check the box for either PA or LLC, and then underneath that, your discount code is going to be SMD 167, and then today's fee will be $299, or if you're choosing an LLC, will be $354. Most choose this package, most do a PA. You can do the tax ID, you can do the 2553, you can do the DBPR compliance, but the bottom line is you're getting $300 worth of services for $130. Your business is selling real estate. Our business is setting up compliant corporate entities. So the choice is yours. It doesn't matter to us. If you want to take advantage of this and have us handle your filing, just complete that form and send it back to me. If you look at the front of the form, my email address is on it. So just scan it and email it back to sdalia@daliasales.net, and that will be it. How are we doing on time? We're pushing the 1 hour mark here. So let me address a couple of these questions. I want to try to get us out of here in the next few minutes. Here's some questions, and these are very similar to the ones I get. We already talked about the husband and wife. We already talked about the naming of the corporate entity. Here's one I get a lot. A lot of realtors do property management. Some realtors do appraisals. They have other interests. I mean, you're entrepreneurs. You have other initiatives that you work on. You cannot set up a PA or an LLC entity and run any other business through it. So if you own properties, you own investment properties, you can't do them in this PA or LLC. You want to do investment properties, you need a separate LLC or an Inc. So your real estate PA has to be completely owned by you, 100% by you. No spouses in it. It must be in your name. It can't do any other business. It can't do property management. It can't do appraisals. It can't own and flip properties. Nothing of the sort. Just your real estate licensed activity for which, real estate transactions for which you are licensed that throw off a commission that are paid to your broker, and your broker pays your corporate entity. That real estate commission is the only money that can flow through this corporate entity. Other people want to know, okay, so I already have an LLC. Can I put this PA under my LLC, or can this PA own other entities? No. Remember, Florida is the best state in the country for realtors to incorporate, but there's a couple of rules. They're spelled out in Florida Statute 475 of what you can and cannot do. Your corporate entity cannot own or be owned by anything else. It cannot do anything other than real estate transactions. So, I mean, that's it. It's pretty simple and straightforward. If you have other interests or initiatives, you have to really start thinking about doing those through a separate entity. Let's see, we talked about this. What should I do? An LLC or a PA doesn't matter to us. As we talked about, they both provide the same level of protection, the same tax benefit. Here's another question. If I do an LLC, should I also submit Form 2553? Yes, that's a great question. When you form a PA, you're a corporation. You start off your life as a C corporation, so you must submit Form 2553 to get treated as an S corp. When you form an LLC, you start off your life from a tax standpoint treated as a partnership. A partnership gets taxed, all your money gets taxed as salary or commission, where you would otherwise owe self-employment tax on all your money. So even if you form an LLC, you still want to submit Form 2553 to get that tax treatment. So it's all about how the IRS treats you as a taxable entity. You want to have the 2553 whether you're a PA or an LLC. Here's one. Can we set up entities for investors? Yes, we do investor companies all the time. I have a lot of realtors that have done their PAs or real estate license LLCs with me that have come back because they're avid investors themselves, and every time they buy a property, they put it in an LLC so that they can keep it separate. Quick story on that. I have an investor out in the state of Washington, and she owns 11 properties. She opened up 5 separate LLCs because she wanted some separation, because she said if somebody slips and falls and cracks their head at one of my properties, I don't want to lose all my properties. I'll take my chances by putting 11 properties into 5 LLCs. So now if somebody slips and falls and cracks their head at one of her properties, all they can do is win the assets of that LLC, which will house only 2 or 3 of her properties, not all 11 of her properties. So we do those all the time. The pricing here is the same. The only difference is the filing fee for the state for an LLC is $125, so it does raise that price by $54. Oh, yeah, good point. If you're doing an LLC for investment properties, there is no DBPR compliance form required, so you can have this bundled package, and it's actually $50 less. So if you're doing an LLC for an investment property, there's no real estate license involved, so we don't need to be concerned with that last line item of the RE16. Just drop $50. So an LLC bundled is going to be $354. If you're doing that, just cross out $354 and write $304 on your form, because we don't need to do the form RE16. All right, I've got us at an hour of presentation, so I'm going to leave it there. Actually, a couple minutes over an hour. Again, you have my phone number, 954-415-4515. It's on the form. And my phone number is as well. My email address is as well. Call me anytime. If you want to take advantage of this discount, please get your form to me no later than midnight tomorrow, because we are going back to the full price total then. You can do the standard package at any time, but if you want all these other bundled services at the discount, please get me your form by tomorrow night. I thank you so much for taking an hour out of your day to spend with us here, and I am available just about any time. Call, text, email. I'd be happy to help you anytime. Thank you so much for attending today's presentation. Bye for now.